Welcome back, everyone. Today, we are officially capping off week 2 of our journey. And listen, we're doing it by handing you what we call the Neuro Finance Master Key. This is the one concept that once you really truly get it, it changes absolutely everything about how you see the market. Okay, you ready? Let's dive in. You've heard this a million times, right? The market drops, 5% in a single day, the headlines go crazy, your friends are all panicking, and that gut reaction is always this: the market is too risky. It's just pure fear. But here's the secret. That statement, it's fundamentally completely wrong. Exactly. I mean, what if that feeling, that deep in your stomach panic, is based on a total misunderstanding? We're here to tell you that mixing up two very different ideas, risk and something else entirely, is probably the single biggest reason amateur portfolios get destroyed. It's a classic, unforced error, and today we are going to remove it from your playbook for good. So, okay, if that big, scary market drop isn't actually risk, then what is it? Well, it's a powerful but totally normal force called volatility. This is the word the pros use, and it's the word you need to burn into your brain starting right now.
And when you really look at the definition, it's pretty simple, isn't it? Volatility is just the market going up and down. That's it. It's the background noise. It's driven by the daily news cycle, human emotion, rumors. It's the expected choppy movement of the ocean. It's not some monster from the deep, it's just the waves.
And this, right here, this gets to the absolute heart of the difference in thinking. The amateur sees a market drop and feels that immediate, sharp pain of a potential loss, and they label it risk. But the professional, they see the exact same event and correctly label it volatility, just an expected part of the journey. It's the same drop, two completely different ways of seeing it, and that leads to two completely different outcomes. This is the metaphor I want you to remember forever. Think of your portfolio as this massive, incredibly well-built ship. When you hit a storm, that ship is going to get tossed around by some rough waves, right? That's volatility. And yeah, it might feel scary in the moment, but the ship itself isn't broken. It's just doing its job, navigating the weather. Professionals don't just tolerate volatility. They actually expect it. They totally understand that those ups and downs are basically the cost of being in the game that generates real long-term wealth. You simply don't get the incredible returns of the stock market over time without being willing to pay this price of admission. Okay, so if market drops are just volatility, just bad weather, what is real risk? Let's get into that right now, because true risk is something far more serious. And more importantly, it's something that is almost always self-inflicted. This is it. This is the only definition of risk that truly matters. It's not a temporary dip in your account value on a screen. Risk is when your money is gone, for good. To use our metaphor, this isn't just rough weather. This is a catastrophic hole in the hull. Your ship is actually sinking. And here's how you sink the ship. Just look at these. Notice something? These aren't things that just happen to you. They are things you do. Going all in on some speculative bet, or worse, gambling with borrowed money, that's how you invite permanent loss into your life. A diversified portfolio dropping with the rest of the market, that's not this. That's just the weather. All right, enough theory. Theory time is officially over. Let's put this master key of yours to the test with a real-world scenario. This is where all your neural fitness training really kicks in. I want you to really imagine this. You wake up, you grab your phone, you check your accounts, and the entire market has just taken a nosedive. The headlines are pure chaos. Your gut tightens up. So what is your immediate, trained reaction? And we're not talking about some little dip here. Let's make it a significant, stomach-churning drop. 20%. Your portfolio's value is down by a fifth overnight. That feeling of panic? It's real. Now look at these two paths. On one side, the amateur feels the pain, mistakes the weather for a sinking ship, and what do? They sell everything, locking in a massive permanent loss. But the neural fitness trained investor, they see that 20% drop, and they correctly identify it as severe but temporary weather. They trust that their ship, the actual businesses they own, is still sound, and they either do nothing, or they recognize that everything just went on sale and they calmly buy more. And with that single, powerful understanding, you have officially completed week 2. The foundational engine of your financial vehicle, it's now built. You've done the really heavy lifting on the most important part of this entire journey, your own psychology. Seriously, just think about what you've actually accomplished in just 2 weeks. You built your financial defense system. You planned your offense, because now you know exactly what an asset is. You have your target in sight, your freedom number. And today, you are given the master key, the profound difference between risk and volatility. Your psychological fortress is now built, stone by stone. It is ready. For 2 solid weeks, we've been building the ship and training the captain, and that's you. Well, next week, we leave the safety of the harbor. We're going to stop talking so much about theory, and we're going to start analyzing the actual mechanics of the stock market. So get ready. The journey truly begins now.